Hey, good afternoon, everyone. My name is John Geminati, EVP of Production here at Angel Oak Mortgage Solutions. We'll get started here in about another 30 seconds. Let everyone log in. So today we're going to talk about our second liens, the HELOC and the closed-end second. We're going to share with you some data on equity in the homeowners have today, the equity that they have in their house today. And we're going to teach you some tips and tricks on how to drive more business and not just rely on the housing market loosening up. So give it about another 15 seconds and we'll get started here. I'll have the honor of introducing our two subject matter experts, and we'll get ready to roll here in about another 10 seconds. Hope everyone's having a great February. Hopefully wherever you are located, you're not freezing. And let's do this. Let's get started. Okay. Again, my name is John Geminati, regional EVP of Production here at Angel Oak Mortgage Solutions. I just demoted myself. But anyway, but I'm honored today to be here with two great people and account executives with Angel Oak. Eric, representing the West Coast. Eric, please introduce yourself.
Eric Morganson out here in sunny California. We're here to show you guys how to make money on all of the equity out there in America. It's not tough.
Yeah. And then representing Florida and the East Coast, Scott Grubel. Please introduce yourself, Scott.
Yeah, good afternoon, everybody. Scott Grubel here. I'm on the opposite coast, but also in sunny Florida. Account executive down here in this region for 9 years with Angel Oak, and looking forward to discussing this hot topic right now that is really picking up steam in the market.
Yeah, Scott, and I'm glad you mentioned your tenure, 9 years here with Angel Oak, coming up on your 10-year anniversary. I know Eric just celebrated his 12-year anniversary, and myself, I've been here 11, soon to be 12. So just between us all on this call, we've got about 23, 24 years of experience just at Angel Oak, so which is very, very impressive. So just some housekeeping rules. This is being recorded. This will go out before end of day today. Everything we're doing today is on our website. This isn't a PowerPoint presentation. Everything's driven from our website. So before we dive into our programs, we're going to launch a poll here, and the poll we're going to ask is who has closed a second lien in the last 12 months. So while that's going on, I'm going to share some, we talk about, and Eric, can I steal your quote, Eric?
Sure.
Yeah, generational low rates, right? Generational low rates. We have 85% of the people in the U.S. have a rate less than 6%, and 63 have a rate less than 4%. So these people probably don't want to move, but their equity is expensive. I mean, the average homeowner has $311,000 worth of equity in their home. That's just the average. So I haven't seen the poll. Have you guys seen the poll pop out?
I see it. Yep.
63 yes. Yeah.
63 yes. Okay.
63%, 64% yes. 36% have not originated a HELOC or a second loan.
So guys, we're gonna talk to you today about our HELOC and what makes our HELOC really special to the industry, and then we're going to talk about our closed-end seconds and a couple of things that make that really interesting to the industry. And so, Scott, let's get started here. I'm on our website, so we're going to look up for our HELOC, our bank statement HELOC program. Hold on, Scott, give us some highlights of the bank statement HELOC.
Yep, perfect, John. So obviously our home equity line of credit is offered in both full doc and bank statements. Full doc is pretty straightforward. Obviously, everybody knows how to qualify for those. But there is a huge amount of underserved borrowers out there, as we all know, in the bank statement community. Borrowers who have obtained a first mortgage at any time, really, using a bank statement program, are still borrowers that today, if they wanted to pull equity out of that property, would need to qualify using a similar product. And so that's how the bank statement HELOC was born. A lot of these borrowers are sitting on generational rates, even for a bank statement first mortgage, and they don't want to touch them. But they've built up all of this equity. So that's where the bank statement program was created to provide a solution to that underserved market. And we're seeing a huge amount of traction with this product from our existing loan originators who have been aggressive in going back to their existing database of borrowers that they've closed a first mortgage bank statement for anytime in the last 5 to 8 years, and just simply reaching out and saying, hey, you know, we did this first loan back in whatever, 2020, 2021. You've got equity built up in the property. Have you thought about renovations, expanding your business, maybe even buying another investment property? We have a product that can help you tap into the equity without touching that first mortgage. And so again, just the way a HELOC would work normally, but rather than qualifying with full documentation, we're qualifying this using the bank statements the same exact way that we would on a first mortgage. So here's a few highlights that some people are not aware of. The loan amounts on a bank statement HELOC actually go up to $750,000. These are not small loans. And for most, you guys would know that on average for us historically, bank statement first mortgages, the loan amounts on those are usually over 600,000 and in some cases much higher, right? These are higher end properties that we're tapping into the equity on. And so you're going to see a lot of higher loan amounts, 500, 600, 750. We do these as first liens as well. So if your bank statement borrower happened to have paid off that first mortgage, it's okay. They don't need to do a full cash out refi to come take out some equity. We can do a first lien home equity line of credit so that they can pull on that equity, draw on it, and use it as needed. We do them on primaries, second homes, and investments. So don't think you're just pigeonholed to primary residence. We can do it on all 3 occupancy types. We do have a minimum draw where we want the borrower to draw 80% of the line at the closing table, and they hold on to that line usually for 90 days, at which point they begin to just pay back on it. But the way they're structured is they're 20-year loans during which the first 5 years are going to be your draw period, right? And during that draw period, the payments are interest only. After those 5 years, when it converts to your standard amortization, that's when the principal and interest payments will kick in. But it's a 5-year interest only payment, and there's no restrictions on how the funds can be used. The borrower can really choose to use those funds, as I said earlier. Maybe they want to expand their business. Maybe they want to consolidate debt. Maybe they want to buy another investment property, right? Or renovate the property. There's a number of different options. They can use the funds however they like. Minimum credit score requirement for this program, guys, is only 660. And we do go up to a 90% CLTV. That requires a 680 score, but we do have the ability to go up that high on the CLTV. So as you can see, just, you know, a lot of options that this provides these self-employed borrowers to be able to tap into the equity in that property.
Yeah, Scott, I'm glad you mentioned, you know, we calculate this the same way we do on our traditional bank statement program. So there's no difference in Eric, who's going to calculate that income for them?
We do it for you. We'd much rather you folks out there go out and find more borrowers than mulling over somebody's bank statements and trying to figure out how to determine their income. We do it all for you, and we do it right up front before we disclose.
Yeah, and Scott touched on this earlier. These are, you know, our average bank statement, the average bank statement loan is, you know, over $600,000. But, you know what we talked about it briefly before we got on the call is our average HELOC bank statement HELOC loan amount is over $325,000. So these are not small loans. You can, like Eric said, we want to make you money, right? So here, you know, here's an opportunity to go back to your entire database, whether they were full doc tax returns or whether they, you know, or they were a bank statement borrower. We've closed, and I should have had this number before this. I can't remember how many bank statements we've closed over the last 10 years. It's got to be thousands and thousands, tens of thousands. I mean, really work with your account executive to go maybe back through that and work up a marketing plan.
Yeah, there's a misconception, John, I think, with the loan originator community that, most borrowers are just going to go to their bank or locally to a credit union to pull a HELOC, and that's not the case. As a matter of fact, a lot of those banks and unions have pulled out of the HELOC market, or they've become very conservative in what they're offering. Most of the HELOCs being done today are being done in the private sector. They're being done by wholesale originators like us.
Yes.
So there's a massive opportunity there for originators to be able to provide a solution for their borrowers.
Yeah, and Scotty, Carlos is asking, you mentioned up to 90% with the 680 score. What's the max LTV, CLTV with a 660 score?
With the 660 score, you're going to be able to go up to an 80% CLTV.
Yeah. So thank you, Carlos, for asking. Again, I didn't state that in the beginning. This is very interactive, guys. You've got two of the smartest people here with you to answer any questions. So please use that question queue, and we'll get your answers answered. If we don't get to them, we will have your account executive reach out to you before end of day tomorrow to have a conversation with you. So,
John, I'd love to point something out for everybody out there in this. It's a cash out world right now. And if you haven't been doing cash out loans, seconds, or even cash out first, you're missing out on a big opportunity. Keep doing what you're currently doing, but add this to your repertoire. There's three things that really are coming together right now in America that make this opportunity amazing. Never before. Number one, never before has that first interest rate in place been so low. When John calls it a generational rate, meaning, listen, parents are living in a house with a 3% interest rate loan, but they might pass away. Well, the kids, they're not going to tell the servicer their parents are passed away, and they're going to keep making that 3% payment. It's a generational rate. You don't want to touch it. Number two, never in the history of the United States of America has there been so much equity in residential real estate. And all states, it isn't like just California and not Maine, it's across the nation. It's unprecedented. Number three, never before has credit card debt, car loan debt, SBA, Small Business Administration loan debt, been so high. Now look at the rates on these loans. It's a lower rate than an SBA loan, much lower than credit card debt. And never, ever underestimate the desire for an entrepreneur or somebody that's self-employed to get their hands on capital. Why? They can take $200,000 and double it in 3 months through their business acumen. But they don't know that they can tap into what is referred to as dead equity. Why? They've probably gone to Wells Fargo, tried to get a HELOC, and they don't qualify because they can't document enough income. Why? They're taking advantage of our tax code. If you're self-employed and you're paying any taxes, fire your accountant. Literally, our tax code is designed for job creation and investment into businesses. That's why self-employed people, it's wonderful because they don't have to pay much tax, but it's tough when it comes to going and qualifying for a loan. This is an amazing solution, and we need all of your help out there to get the word out that they can tap into their equity, and you guys are going to get paid for it. Now, I used to be an originator, and if I'm sitting in your seats, I'm thinking, okay, how am I going to make any money doing seconds, the low loan amounts? I can walk into my credit union and get a free second. Heck, they'll even pay for my appraisal. How am I gonna make money on this product? Well, as Scott mentioned, these are loans that credit unions that Wells Fargo's not doing. Chase and B of A pulled out of the second mortgage market, even creating a bigger vacuum for this opportunity. Folks, jump in. The water is fine. We are in a cash out world, and the sooner you take advantage of it, the better looking your personal checking account's going to be.
Yeah, you mentioned, since I'll give the stat here, since 2020, the average home has appreciated over 47%, almost 50%. That's in the last 6 years. And you touched on, credit card debt. The credit card debt, not only credit card debt is at its highest ever, the fees that are charged are over 120 billion a year they're paying in credit card fees. So there's a lot of opportunity out there. It's really, and you do a great job about talking like this is from a standpoint, be a trusted advisor, right? Be the trusted advisor. Go back to your entire database and ask them what's going on in their lives. Maybe their kid just got accepted to a college that they weren't planning to send them to. So these are all the things that staying in touch with your database will help you realize some of the opportunities for not only for your borrower, but for yourself. So I appreciate you talking about that, E. Let's talk about, Eric, let's talk about closed-end seconds. I know we still got questions coming in on HELOCs, but let's move this along and talk about closed-end seconds, and then we can talk about, hold on, my screen. Eric, talk about some highlights of the closed-end second, please.
Well, a closed-end second is just as simple as it can get. When the loan funds, if it's a $400,000, $500,000 second, all those funds go to that borrower, and it is now a fully amortized loan. It doesn't have an IO period. By the way, we do DSCR seconds. That's a closed-end second. Somebody owns rental property out there that has a boatload of equity in it, and of course can't document income on their taxes, and maybe they're not self-employed, so they can't go bank statement. They don't make enough money. You can do a DSCR cash out second. Think about that. Now, the benchmark is it does need to rent roll at least 1.2, meaning if the payment to Angel Oak is, let's just say $4,000 mortgage payment, it needs to rent for at least $4,400. So it does need positive cash flow on that. But we can determine that for you up front with, we run an AVM for you, a rental AVM. But again, equity in owner-occupied, second home, or investment property, that equity can be used right now.
Yeah, E, you jumped ahead a little here, but I like it because, you know, you talked about the DSCR closed-end second. DSCR unit-wise is our #1 program here at Angel Oak. And you got to believe that the way to build wealth in this country is through real estate, right? And so let's just jump over there, Scotty, kind of touch on some of the highlights for the DSCR closed-end second here, if you don't mind.
Exactly like Eric just mentioned, you're taking the simplicity of a closed-end second lien, and then you're overlaying it with the ability to qualify via DSCR. It's very straightforward. The loan has to qualify based on the rental income that the property is generating. These are properties that are already in service that the borrower owns. There's already rental income being generated from them. So we're going to know right up front exactly what the rental income number is we can use to qualify the DSCR ratio and whether or not this loan qualifies, or how we may have to restructure it to get it to qualify. But other than that, it's very straightforward. You need a 700 FICO. You can go up to a 75% CLTV. So again, these are borrowers who 99.99% of the time purchase the initial first mortgage via DSCR. They want to tap into that equity without touching that rate because they have a great rate on that first mortgage. They can come in and do a closed-end second mortgage and qualify the same exact way with the DSCR ratio to pull out that cash. They're going to get their lump sum cash in hand at the closing table, and they can take those funds and use them as needed. It's not an equity line. It's just a straight fixed term second note that's going to be added to the loan, to the first mortgage.
And it keeps getting better because if that second, that interest rate is 100% tax deductible because that's an investment property. Now, on an owner-occupied property, if I take $500,000 out of my doing a second here through Angel Oak, and I use that money to rehab my house and so forth, well, that interest rate's only going to be tax deductible to whatever my tax bracket is, up into the limit of $750,000. However, if I'm self-employed, I can take that $500,000 and apply it to my business. That now makes it 100% tax deductible.
Exactly right. Take those funds, use them to purchase another investment property, right? That's what we're seeing a lot of with these, specifically the DSCR closed-end second, and with a lot of our HELOCs. John, one thing I kind of want to just take a step back on the HELOC product, because we brought it up, but we failed to mention on the HELOC product. And I think it's important for originators to know this, that on the home equity line of credit, we're also running an AVM on those loans right up front to determine the value of that property. So as long as your CLTV is 80% or less, and the loan amount is 450 or below, we can actually run an AVM and use that AVM's value to determine the CLTV, meaning no appraisal would be required in that case on that home equity line of credit.
I'll do an Eric, bam, right there, right? That's
no appraisals on these people. No appraisals. How great is that?
Yeah.
Yeah, and so you answered Cleon's question, and Cleon's clapping. So thank you for covering that, Scott. Hey, Eric, Cleon's also asking, what's the minimum loan amount on a HELOC? I know
on a HELOC,
sorry, go ahead.
It's going to be 125. On our closed-end seconds, it's going to be 100,000. I know we get a lot of requests for 75,000 and so forth. We just don't have any flexibility. That is a hard stop on minimum loan sizes.
Yeah. So Scotty, you talked about that AVM. Anything else you want to share regarding, that AVM, and then how does that? Because we all talk about speed. People who make this decision to do a HELOC, it's all about speed of the transaction, right?
Right. Yeah. And go ahead, John. I'm sorry.
No, go ahead.
I was just saying, and that's done basically at the pre-approval stage. So with our process, loan originators are going to upload the bank statements. If it's a bank statement loan, your 1003, your credit report, you're going to submit it to the account executive for review. And right at that stage, you're going to input the subject property's address. So when you hit submit on that pre-approval request, our system instantly runs the AVM right up front. So when the account executive is reviewing that file, the income, the terms, the DTI, et cetera, credit, we're going to know exactly what the value is that we can work with to determine that CLTV. And if the loan works at those terms, there's no appraisal required. So when you go to submit this loan to underwriting, if it's a bank statement loan, your income's done, right? It's been calculated up front. There's no appraisal required. We know it's just a simple HELOC, right? There's no purchase contract or anything involved. Insurance is in place already. We have to pull title, and that's it. So these loans are closing very quickly. They're flying through the system. And as I mentioned earlier, they're higher loan amounts that we're doing on these. So you're talking about $300,000, $400,000, $500,000, $600,000 loans that are literally closing in, 7 to 10 days.
Yeah. And John saying, you make it sound so simple. It is simple, right? It really is simple. Let us guide you through the process. We can definitely help you grow your business in 2026, whether it's doing HELOCs, closed-end seconds, and or purchase cash out. As Eric mentioned earlier, this is a big time for cash out, not just HELOCs, not just closed-end seconds, but people are still, they own their houses free and clear and want more cash out. We can do that for you too. So there's opportunities out there. Don't wait on the housing logjam to loosen up in order to grow your business. So one of the things I did want to talk about, Scott, you talked about the closed-end seconds. We still got some questions coming in. I'm going to talk about some of the tools that we have here. And I already ran a scenario. Let me see if you guys can see this. So we talked about, can you guys see my screen?
Yes.
So I took a property value of $600,000. I put in the taxes, insurance, what the first lien loan amount is, what that generational rate is, as Eric always alludes to. And then I ran a quick qual. We'll talk about the quick qual process here, and came up with a 9.25% second lien term. On the first was 30 years. Second lien is 15 year. And here's their monthly payment. Guys, you have a 2,400 first lien, 50% LTV. Here's your second lien. It's 25 LTV, CLTV. And here's your blended rate. Everyone looks at this 9.25 and says, whoa, maybe not. But look at this blended rate. Less than 6, less than 5.5. And if you've got credit card debt, like Eric talked about, the average credit card interest rate is over 24%. That can save you a lot of money. I don't know, E or Scotty, if you have anything else to add to this.
Well, I would just say, folks, your database, all the borrowers you've ever done a loan for in your careers, they have equity. Just have the conversation. Because if you don't, some other loan officer is going to call one of the customers in your database and possibly have that conversation before you. So the lowest hanging fruit in the mortgage industry right now is to reach out to somebody that you've done a bank statement loan for and offer them access to that debt equity in their property. You already know they're self-employed. And again, I keep on hitting this bell. Don't underestimate their desire to get their hands on capital. These banks, you guys, these second mortgages, cash out, they're more urgent than purchase loans. I'm telling you, once they wanted the money before they even talked to you. So, and they want it quick.
Yeah, yeah, well said. You know, we talk about, just lost my train of thought. Sorry about that. But we talk about just that blended rate. I mean, it's just really, really low. Really, these should be really easy conversations to have. I was presenting yesterday in front of a room full of people, and I felt myself getting like annoyed. Guys, this is easy business. This is really, really easy business, and we're gonna hold. We have 24 years of experience just on this call, and we have the most tenured account executives across the nation. They will hold your hand and make this process so easy.
Because we have over 30 years experience with the three of us, John. I'm telling you, I'm a gray hair.
That's right. But yeah, listen, as Eric said,
sorry.
As Eric said, I mean, it's just the biggest no-brainer there is, in my opinion. At worst case scenario, you're having a friendly conversation with one of your past customers from your database and maybe just touching base, staying in front of them, learning a little bit more about their situation. At best case scenario, you're walking away with a potential loan application to help them tap into the equity in their property and get their hands on that working capital. It's just a no-brainer. Why we're not seeing more originators literally just immediately starting to make the phone calls or send a blast email to their database is beyond me. But those that have, and I do have, and I'm sure Eric does have a few that have made that a priority, these are the ones that are closing 3, 4, 5 HELOCs with us a month right now and taking advantage of that opportunity.
And as far as rate, guys, no, we're not selling rate. We're selling payment. Look at this. There's $150,000 for $1,500 a month. Listen, whenever you make a payment on your mortgage, you don't write your interest rate. You write the payment. That's what we're selling. That payment is quite the solution for 150 grand.
Yeah, and I did remember now what I was trying. We have more people now than when we started, so I did want to do a quick housekeeping roll. And thank you for correcting me on my math. It's over 30 years combined, so thank you. This is being recorded. If we don't get to all your questions, we will have your account executive reach out to you. We will get this recorded out before end of day today. For anyone that registered or attends here today, this will be sent to you. So I appreciate that. So let's talk about, Scott, take us through, how do we get you the bank statements? How do we do a quick quote? So let me get back to the homepage here.
Hey, somebody made the comment earlier, you guys make it sound so simple, but here we're going to show you just how simple it is. And even if you go back to that blended rate calculator, I mean, we just talked about, reaching out to your database, and look at how easy that tool is for an originator to have up in front of them and simply just plug in the numbers of, the first mortgage that they originated for this borrower, and then give them an estimate of what the second mortgage is going to look like. I mean, it's literally all right there for you with just a few clicks of the button. But yeah, as far as getting the file in, so one of the things that makes Angel Oak unique, and I love this part I love this part of our process, is the fact that as account executives, we are still reviewing every single loan that comes across our desk before it gets into underwriting to ensure that that loan is going to be set up for success when it gets submitted. This is why we have a company conversion ratio in close to 80% from submission to closing, which is unheard of in the non-QM space. It's this process here. And it's as simple as clicking on the non-QM quick quote button on our homepage. You do not need credentials to access this. You'll select your channel here as a broker, and you'll immediately see all of the different options that we offer. In this case, we'll go HELOC, right? We're talking about HELOCs today, and we're going to start to simply input the data that we're looking at for this particular scenario. The loan amount being requested, CLTV being requested, credit score, housing history is clean, state the property is located in. We're going to add our income documentation as a bank statement loan here. Compensation type we'll put in as borrower paid for example purposes here. And then as you can see, we'll ask you the lien position, if it's a first lien HELOC or if it's a second lien HELOC. So in this case, we have it in as a first lien HELOC, and we entered the draw amount for the HELOC there as well.
Okay, what did I?
So go to your draw amount needs to equal the loan amount there, 300,000 you have, John?
There we go, guys. So we're going to enter the draw amount equal to the loan amount, which was a good exercise to show. It needs to be at least 80% of it. And you're going to see instantly your rate stack pop up. So what you'll notice here, guys, to go over the pricing real quick is you have your rate on the left-hand side. So we'll say 9.25 down here at the bottom, right? So the pricing on a home equity line of credit is based on the Wall Street Journal prime rate. These rates are the prime rate plus the margin that you see on the far right-hand corner, okay? So today's Wall Street Journal prime rate plus the 2.5 margin equals the 9.25 rate that you're seeing for this. This rate will adjust on a monthly basis based on the Wall Street Journal prime rate, which has been declining. So when the Wall Street Journal prime rate declines, all HELOCs, whether closed or in process, will adjust downward in terms of rate, which is a benefit to the borrower as well, of course.
Yeah, Scott, some of the conversations you and I have had, you know, we require them to take 80% of that draw, right? They can put it in a high interest yielding account and, you know,
That's right.
make a little money on it, even though they're paying a little bit more interest than the high yield probably, but it doesn't mean it just has to sit idly in your bank at a, you know,
Right.
earning 0.25% interest, right? So.
Right. So if we wanted to send this scenario in for an account executive to review, we're going to click on the rate that we want to choose to send out our pre-approval on. So we'll say 9.25. And then you guys will see these boxes pop up where you simply enter your account executive's name. You'll input your basic information, loan officer, company, NMLS ID, phone number, email address, borrower name. And at the bottom, you will see we have fields where you can literally drag and drop or upload your 1003, your credit report, and your bank statements. As soon as you hit submit on this, it goes directly into our portal securely and notifies your account executive that a pre-approval request was submitted for a home equity line of credit from this loan originator. And your AE can then take action. We'll get that income calculated. They'll review that 1003, that credit report, and you will have a pre-approval on your desk within 24 hours typically of the AE receiving this file. So now you've got your pre-approval in place. That means your income has been calculated. That means we potentially could have run an AVM on the scenario and have a value in place. And now all you need to do as a loan originator is register the loan and request disclosures, which can all be sent to the borrower instantly. You can have literally your loan disclosed and submitted to underwriting within a few hours of receiving this pre-approval from your account executive. It's that easy.
John's had a couple questions here. I think he's like, you guys are motivated. He goes, it's finally time. So yeah, John, yeah, it is, John. And we can help you do that. So
the cash out world out there,
it's
only getting bigger.
You're 100% right, E. So yeah, I kind of had Scott take us through the quick quote and how to submit a loan to us, which I was jumped out of turn. That was supposed to be yours. So Eric, do you want to take us through the marketing portal? Because it just doesn't end here, guys, on what Angel Oak offers you, right? Angel Oak offers you just, you know, not only these great account executives, they offer you how to we have a marketing portal that Eric's going to take us through and show us some highlights of that.
Sure. On our website, you can get set up with us. We'll grant you access to our portal. John's going to go ahead and show you. He'll log into the portal, and we have a marketing tab. Folks, we need your help getting the word out that these programs exist. And we have quite a selection of marketing firepower that we've already done the work. All you have to do is just put in your contact information to customize it to you. These flyers do not say Angel Oak anywhere on it. You simply upload your logo, your good-looking photo if you want to go that way, and customize the marketing for you. So with this said, you folks out there, knowing that B of A and Chase don't do these, I would go to their mortgage professional in any of their branches and possibly let them know, hey, when you're turning somebody down on a second mortgage, refer them over to me. You guys, why not turn them into referral partners on these? Geez, you ever go get your car washed? Take one of these flyers, put it up where all those real estate realtor business cards are, and just let people know that they can tap into equity through you in this program. John, you want to go ahead and click?
Yeah, I'm going to, while I'm clicking on the bank statement HELOC flyer here, I found myself yesterday using a lot of your quotes, and I'll pay you for them down the road somewhere. But, you use this one expression, where do you find self-employed borrowers? Open your front door, right? You will trip over them.
Yeah, you guys, and here's the deal. Your database of, if you've ever done a bank statement loan or self-employed people, hang out with self-employed people.
That's right.
Ask, hey, do you have any friends that might be interested in tapping into some equity? Ask, throw that out, and you'll be surprised, because self-employed people want to get their hands on capital. It's a beautiful thing. So as you can see, this bank statement flyer, John, right over there is just, you can see where you would just put in your name, your contact information, and this will save it. Then you can go back to one of the 40 different flyers that we have, and now all your contact information is already baked in to all the rest of the marketing for you. We have local AEs. I know this is a national call. We have local account executives here at Angel Oak that literally want to go and co-present with you. If you have any real estate offices that you want to visit and let the realtors know about these aggressive bank statement loans, why not possibly cash out and go buy more real estate? You guys, buying investment properties is a lot like tattoos. Once you have one, you just want to get another. So literally, your realtors know that people that are hungry to buy investment property, but they might be a little bit shy in capital. Well, tap out of the equity for the down payment, and off to the races you go. And again, buying investment properties, we know the interest rate is 100% tax deductible. So here's some PowerPoints that we've already drafted for you. We even have, John, if you want to pivot over to social media, think about social media to be really good at it like Scott is. You have to post consistently. You can't be one and done on social media. You have to be relevant and consistent. Well, we have made it easy for you to be consistent with social media and getting the word out that these non-agency, non-QM programs even exist. And don't be shy to be repetitious to get that messaging out, because normally it's you ingest that message 3 times before it really sticks. That's why when you're watching TV, you see the same commercials over and over and over and over again. Why? It works. But again, folks.
Yeah, Eric, you talked about the flyers. We have at least probably 20 flyers out there for every different product or scenario we have out there. Here we have social media posts. Here's bank statements. This is already developed for you. I kind of, our front page of our website saying, serving underserved borrowers. Well, I do believe our marketing portal is the most underutilized marketing portal out there, and I believe it's one of the best, if not the best. So we have the bank statement borrowers. We have it for Instagram and Pinterest. We already have the images. We have the copy. We have it. If you want to drive that towards realtors, we have it. We have the images. We have the copy. We have this all. Eric talked about a cash out world. We have cash out for Instagram, Facebook, LinkedIn. I believe if you took every social media post, flyer, and realtor presentation, you could probably have a marketing campaign for a year, doing one every week, without a doubt.
And notice how the design is different to kind of mix it up as well for you folks out there. But again, lean in on your Angel Oak account executive to literally co-present with you. You guys, this is what they do. They will simply help you get the word out. You don't have to be underwriting experts or program experts. That's their job. Bring them along as a program specialist to be able to field any question that this real estate office might be throwing at you.
Yeah, and as Eric says, we don't say anything about Angel Oak. We just say we're one of your investors. And, you know, I'll use John here. He's asked a lot of great questions, and he seems super motivated going forward. But if Eric or Scott or myself goes in and presents on your behalf, we're going to talk about our bank statement program. We're going to talk about what are you going to do when you get a self-employed borrower? Well, you're going to call John, right? Or what are you going to do when you get a debt service coverage ratio program? You're going to call John. And, you know, what are you going to do when you get a bank statement HELOC? You're going to call John. So everything gets driven back to you. And we're just your subject matter expert presented on your behalf. And don't tell them anything about Angel Oak. Scotty, anything in closing?
I think we covered really this topic and these products about as well as you can cover it. Eric hit us with the facts, right? Eric hit us with the simple, hard facts. They cannot be denied. The market is what it is. And if you really look at those facts and the way that Eric laid it out, what you see is a dislocation, right? Tons of equity here sitting in these properties, some of the highest amounts of debt we've seen in this country of all types. An originator can be a solution provider to bridge those two together and help homeowners tap into that equity to take care of all of this debt, or tap into that equity to get their hands on that working capital. Just, you know, provide those solutions for your customers and be that trusted advisor.
E, anything in closing?
You guys, this is an enormous opportunity. I know that some of you are going to take advantage of it, and some of you, maybe the timing right now isn't for you, but I'm telling you what, jump in. The water is fine, and you will be surprised how simple these cash out second mortgages are and how profitable they are. You can charge anywhere from 0 to 3 points on these, plus a processing fee. It's all borrower paid comp, so Angel Oak is never going to rake back your broker check. Why? The borrower paid the origination fee. We never rake back a check on those. So literally, this is quite a way to make an extra $10, $20, $30, $40,000 a month.
Yeah, no, I appreciate it. And Scotty, thank you. Just last housekeeping thing, this is being recorded. We will get this out before end of day today. If we didn't get to your question, I know we had Moses behind the scene answering a lot of questions, so thank you, Mo. And but we will get you in touch with your account executive. So on behalf of Eric, thank you for your time. Scott, thank you for your time. You guys are the professionals. So on behalf of everyone at Angel Oak, thank you for joining us today. If you've closed along with us, thank you for your business. If you have not, you can tell, give us a shot. We've got the best in the business. So have a great afternoon. Hope your February finishes strong and the rest of your 2026 is even more powerful than 2025. Thank you. Have a great day.